Good morning, traders. Today is 14th May, and welcome back to your morning market review. We've got key movement across the US dollar, oil, gold, and the Aussie. So let's break it down. So let's start with the dollar. The US dollar slipped below the 101 mark today after weaker than expected inflation data pointed to a limited impact from Trump's recent tariffs. And the CPI came in at 2.3% year on year, which is the lowest pace since February 2021, and just under the 2.4% forecast. And monthly CPI ticked up to 0.2%, but again fell short of expectations. The core inflation stayed at 2.8%, which is a 4 year low. This added to the downward pressure on the dollar. Though there are some optimism after the temporary tariff rollback in the recent US and China agreement. Treasury Secretary Bessent is planning follow-up talks with Chinese officials soon, which the market sees as constructive. And technically, the dollar index is hovering near 101, sitting between strong support at 100.45 and resistance near 102.3. And RSI has eased back to 51.9, which is a neutral territory, while the MACD signals a positive momentum. So overall, the picture remains cautiously bullish, but the price action will depend on whether it can hold above 100.45 in the near term. So next up, oil. WTI crude oil extended its rally today, touching 63.22 per barrel, which is the highest level in over a month. That is 4 days of gain, fueled by the tension surrounding Iran, plus easing global trade concerns. And President Trump reiterated his threat of sanctions on Iranian oil, while the US-China trade ceasefires reduced some recession fears. But still, it is not all upside. There's uncertainty around what happens once the 90-day tariff pause ends. And OPEC production is ramping up. Saudi Arabia is pushing for compliance, and overall OPEC output could increase by more than 400,000 barrels per day in May. And technically, oil remains in a short-term bullish trend. It is holding above $60 with solid close above both the 14-day and 20-day moving average. And MACD momentum is strong, and if support holds at 60.69, the next upside targets are 63.48, and the year's high near 64.5. A drop below 61.6 though could open the door to a short-term correction. So let's talk about gold. Gold rebounded today, trading back about 32.50 an ounce after a steep 2.7% drop on Monday. And that sell-off was sparked by the surprise de-escalation in US-China trade tensions, which triggered a rush out of safe haven assets. And markets are still digesting the scale of this 90-day with both sides slashing tariffs more than expected. And that shift has temporarily reduced the need for hedging, but long term buyers remain active. And from a technical perspective, gold is holding above its 50-day moving average at 31.44, and RSI is just under 49, soft but stable. Resistance sits at 32.80 and 3300, with stronger selling likely kept below 3200. If bulls regain control, 33.24 is the next level to watch. So finally, let's look at the Aussie dollar. The Australian dollar bounced today after the Westpac Consumer Confidence Index rose 2.2%, recovering from last month's drop. While Australian dollar has slipped on the back of the recent US-China agreement, today's economic data helped lift the sentiment. And Australia's close ties to China make the Aussie particularly sensitive to shift in the trade relations. With tariffs rolling back and expectations for aggressive RBA rate cuts cooling, the Aussie is holding up well. And right now, the Australian dollar is hovering around 0.646, and technically the pair is trading just above the 10-day moving average, with RSI around 58. Immediate support is near 0.64, while resistance comes in at 0.6493 and a key 0.65 level. And a breakout above that could take us back to the 6-month high at 0.6515. So to wrap it up, the markets are reacting to softer US inflation, easing trade tensions, and shifting the sentiment across the commodities, with oil rallying and gold stabilizing. So that's it for today's market wrap. Thanks for watching, and I will catch you in the next update.